Hi everyone, welcome back to Be Rich. As you're watching this video, I've reached back to Chennai and I'm glad to be back in Chennai, that I'm sure. Though I am talking about the future and you were probably wondering, how do you know that for sure? But it's always good to be back home, at least for me. So tomorrow's video definitely will be from the studio and we'll have better audio and better video quality. I will show you that. In terms of content today, like I said yesterday, I want to talk about the ETF and that too, especially the TBills, the T-bill ETF and why it's looking so attractive today. I've done many videos on this and I can't stress that enough because a lot of you are very keen on investing in the American market and looking at what is happening between Iran and Israel. I would say, you should be very, very cautious in buying stocks in this kind of extreme market. An extreme in the sense it's overvalued. A lot of liquidity is pushing this market to where it is. And it's very funny. Historically speaking, any geopolitical thing like this, like a war breaking out, would immediately send ripples through the stock market. And there will be huge selling happening, selling pressure on the market. We'll be looking at bear markets. But we are living in a very strange time. And even that should be something interesting. The fact that something is not happening is as interesting as something happening. So, I don't know, maybe tomorrow I'll talk about more in depth about that. How this Iran-Israel conflict should be sending shockwaves. But what happened? Why are there no shockwaves in the American market or in the global market? Why do we seem to be shrugging it off and chugging along as if nothing is happening? That is something very interesting to think about. Today I want to talk about T-bills because they've never been this attractive. And with ETF, owning them has become very, very easy and it's a breeze to buy these T-bills at a pinch, right? Any amount you need, as much as you need, and it's highly liquid also. Investors should definitely be looking at T-bills because government bonds, especially the short-term ones, which are less than a year, are offering ample yield, about 4%, which is much better and much higher than inflation. Inflation in the US is currently at 2% and this at 4%. And this spread has never been this wide in 20 years. You have to go back 20 years to see this kind of a spread between the T-bill interest, short-term T-bill and the inflation. So it is a good place to park money because you're going to get your returns 100%, your capital is safe and there is really no risk. And even the 10-year, it's as good as a 10-year yield because the 10-year is also at 4 and a bit. So you are getting the 10-year yield in a short-term 0 to 3 month T-bill without any added risk. So I think this is a fabulous place to be sitting in. This is the same reason why Warren Buffett, like I've said many times, has sat and he's cornered the market, 5% of the market. He holds around 300 billion or a 6 trillion T-bill short-term market. And that is a huge, vast number to have. I'm sure Rupesh will put up the table on the screen of all the T-bill ETFs available in the US. The one which I mainly would highlight is the iShares 0 to 3 month, which is around, size of that is around $48 billion. And that was launched in 2020. The other one is the SPDR Bloomberg, which is around $44 billion, which has been there since 2007. The Vanguard Ultra Short T-bill, that is the new one, which was started around 2025. So unlike the T-notes, T-bonds, which all place a manually interest and the principal once comes back to you after it matures, these T-bills are sold at a discount, right, from their face value. And if you're paying for 3-month T-bill and discount, let's say you pay $99 for every 100, that gives you 4% spread, which at maturity. So the ETFs is the better way to own this because the ETFs have a distinct advantage over any of the other ways because you're buying directly. It's very simple. It's diversified because it's a pool of securities. Like I said, iShare when SBDR invest in. So this pool of securities gives it more security and the monthly income, and it's easy to liquidate too. And the interest on T-bills is exempted from any local state and local taxes, which is a big plus if you're living in New York and you're a Californian because the state and local taxes there are quite hefty. And if you have this T-bill and the interest coming from that, at least that exemption is there because the fees on this over other money market is very negligible. If you're comparing the ratio of the fees compared to other money market funds, the ETF, T-bill ETFs is negligible compared to them. So that's like the famous quote which we were saying, Netflix and chill. Maybe it is time to do T-bill and chill. This is a question which I am curious to know. Because in this current situation, taking the geopolitical tensions that we're sitting on, we should be ready to grab any opportunity in the market when it comes. And if you look at the volatility, which is going to be quite persistent, because there is no way what is happening in Israel and Iran looks like it's going to calm down. If anything, it's going to get worse. You saw Trump exiting the G7 early, and he had some ominous words. Of course, you cannot believe you taco Trump anything what he says. He says a lot, but finally in action, he doesn't do much. He's more barf than bite. But he did say people in Tehran should evacuate. I don't know what that's supposed to mean. Anyway, he seems to feel that he can also broker a peace deal, which I don't see is possible because Netanyahu is having none of it. The Israelis are having none of it. They feel that they've got one of their long-term sworn enemies where they want. And I don't see any reason why the Israelis were going to back down from this, even if Iran wants to back down. And this is going to be a real messy scene unfolding very soon. And if other regional players get pulled into this, it is not going to be ending anytime soon. So I really can't understand what the market is seeing, which is being so optimistic on, unless they have some inside news which we as the general public are yet to see. So I would be cautious. And the best place to be cautious is in sitting in liquid T-bills, because you get a lot of value for your money. You're getting a 4%, which is a great return for your investment. Even if you look at some long-term stocks, those are the kind of returns that you're getting. And if you invest in the market and the market corrects, you'd be in a lot of pain and waiting for recovery. Here you won't have to suffer that kind of pain while you're getting very good returns. And even if you're very keen on investing, you can take the interest which you're getting from the T-bills and, invest that into the market, and that way at least you preserve your capital for an opportunity which might come. And opportunities always come. It's just a question of time. Will it come? Of course it will come. When it will come is the question. I know it sounds very frustrating. A lot of you are waiting for some kind of market correction and you have not seen it. But it will come. And even if someone like Warren Buffett is able to sit on $300 billion and wait, and he's been waiting because he also feels this market currently makes no sense. So if he's able to sit and wait, I think we can do the same. We can also, whatever large sums of money which you have kept aside to invest in, instead of throwing it into the market right now, maybe you should read the warning signs and keep it in T-bills. Anyway, I would love to hear your opinion on this. Do you think this matters? Or in the long, if you're looking at a 15, 20-year horizon, it doesn't matter if you buy today or you buy it at a correction? I'm curious to know what you think and what is your reasoning behind this. So put it down in the comments. I'd love to read it and then have a debate with you in the next video where I try and answer or debate some of the points you have argued. I hope you found this video informative and entertaining. Like I said, this is the last one from Bangalore. Thankfully, I'll be back in Chennai with better audio and video and a lot more energy because I have Rupesh dancing in front of me. Anyway, thanks for watching the video as always, guys. Looking forward to your comments. Bye and good evening.